What is RSI? RSI stands for the Relative Strength Index and developed by J. Wellers-Wilder. And RSI is the technical indicator that indicate when a stock overbought and oversold. To understand this, let's look at this drawing. On this drawing, the line 30 indicates oversold and a line 70 indicates overbought. So when RSI cross oversold or overbought level, which is 70 and 30, we can expect some trend changing or momentum changing on the price action. For example, on this drawing you can see the RSI crossing 70 level, which is overbought area. So when RSI cross below the 70, which indicates the trend going to be changed. If the market was moving in a bull trend for a long time period, when RSI dropped down to below the 70, it indicating a bear trend going to be start. When RSI cross over the 30, it indicates the price might bounce back. We can expect a bull trend. Let's see some example. So this is the graph of Lupin, and when you apply the RSI, don't change the setting, keep as it is. And the below what you're seeing 30 level, which is oversold, and the above line what you're seeing 70, which is overbought. On the first example, you can see the first signal was generated on the May 13, 2019, and the result of that, the price has dropped up to 20%. And the next signal was generated on the 19th of June 2019. Result of that, price had a bounce back of 12%. The third signal was generated October 9, 2019, and result of that, price had a 21% of growth. So this is how RSI works. However, RSI also can provide some false signal. To reduce that, most of the traders combine RSI with a MACD. So if you want to learn the strategy RSI and MACD, I already made a video, the link on the description box. And this is the video for today. Thank you for watching. Have a good day.